the trading days. And today we are on 14 September between 5 and 5:30 GMT. I'll try to review the market using the live market code page and find out what exactly the players intend to do during this particular week. And also I'll do the market reading and explain to you what could be the possible moves during the day based on the market news study. Besides, I'll also briefly touch upon the trading strategy, how exactly we can use the hedging to limit the risk and maximize the profit. So we will go to the forecast to start with. So this is statistically derived forecast and a series of statistical calculations which is referred as algorithm and which is being used in order to give the forecast. So we find that the day consists of 3 sessions according to the convenience of the players, and those 3 session timings are given here. And when you find swing and slide during the Japanese session, it refers to the swing during that early part of the Japanese session. So from 0030 to 1:30 GMT, about 1.5 hours, 1:32 GMT. Then the late session from 5:30 to 7 GMT, the slide will become visible. So that is what it refers to, swing and slide means. And during that of the mid sessions, some currencies might go in for a small slide, some currencies might go in for a small firm up in order to handle the crosses. So that way you have to read against each day whatever the forecast given. The exact pip size of drop or rise is not given. Instead, you come across the word swing. That means if they are near that of the high, you see in the live market code page, euro is near that of the high, 1.1360. So they will make about 15 to 23 pips swing near that of the high, the up and down move. And that is referred as the swing. So if they are near that of the high, they will make the higher level swing for the intraday and then make the slide. So slide, they are likely to breach the low and go below. And the slide refers to about 30 to 45 pips dip. Then, sorry, if it is a drop like this, then it might be for about 65 to 75 pips or sometimes to 90 pips, depending upon the momentum. So you come across the qualitative expressions given here. These qualitative expressions are given primarily to give an overall picture about how exactly the market would make the move. And if there is a slide mentioned, you might come across about 20-30 pip slide in the case of euro, 40-50 pip slide in the case of GBP, or alternate, or vice versa. So you have to fine-tune it, the slide, pertaining to each of the currencies given. So here you come across the currency euro, for example. 1.1360 is the high. It is hovering around that of the high. And from here, the low is about 18 to 19 pips. So in such a scenario, there is more likely that the low could be breached during that time. And in the case of euro, you find the net change is only about 5 pips from that of the yesterday's or Friday close level, 6 pips from that of the Friday close level. So it is very likely to come down to that of the negative net change. And in the case of GBP, you find the net change is 13 pips, slightly higher than that of euro. And currently it is trading around 54, 38, 39, and about 9 to 10 pips away from that of the low. So here the slide, first of all, they have to make a slide of 14 pips to come to 0,000. Then from there, it has to come down. So in the process, what they could do, they could hold one currency and make the slide in another currency. And that you need to identify and bet on those currency. So whether it is good to sell euro or GBP in order to make a quick profit. So the currency which is going to fall fast is the currency which is showing the least positive net change. Australian dollar is showing 4 pips positive net change when compared to of euro and 14 pips of GBP. So the intention of the player is that they like to drop Aussie first and then followed by euro and finally GBP. That is going to be the sequence. So when I say swing and slide might be more visible in the case of Australian dollar, moderate in the case of euro, and it might be least in the case of GBP. From time to time, you need to read this. So there comes your smartness. So today, they are expected to make the swing and slide during that of the Japanese session, followed by swing and rise during that of the European session. They could make the market go up, euro and GBP, and then slide again during that of the US session. I was mentioning last week that they are likely to come down further and make an extended downward stop, and most likely they could bring in the mid-month trend reversal during this week. But it appears on Friday they gained the levels because many of the traders have taken the sell positions. So when many traders have taken the sell positions, the players gained the levels nominally to induce them to do the short covering. And so only when the long positions are liquidated, long positions are built up in the market, then when they drop, they will be benefited. Instead, you come across more of a sell and less of a long position in the market. They will try to hit the market in such a way so that the predominant of the traders lose. In that process on Friday, they gained the levels and induced the traders to go in for a short covering in the case of euro and GBP by gaining nominally. And today they were holding high, making a brief upward move, started making the slide. So they are expected to make further slide and make more slide during that of the week. And also for FOMC on Thursday, 17th, they are expected to make a big downward move in the case of euro and GBP and make a small firm up towards close and then drop again on the 18th of September. And then it will continue to drop on Friday. And that will probably give the stimulus for the traders to go in for the bottom fishing. So when they take the buy positions at the lower level, because nobody will sell after the drop. So normally they will try to take the buy positions after the drop. And the longs, they are building up after getting a feel that the market is bullish. But probably many of the traders will avoid taking positions before the outcome of FOMC. And they may not make a big commitment. So in that process, what will happen? Next week, they are likely to slide and suddenly make a reversal. Most likely by next week or the week followed by that, they could make the mid-month trend reversal. So they are supposed to do it during the second or the third week, and they are likely to postpone it depending upon the traders' positions. And so they are expected to make the drop in this week and also following week and then reverse the market suddenly as a surprise. So be careful whenever they make an extended downward stop and reverse the market. And that will give the stimulus, or that will give the indication to us that they are going to make an upward shift in trading zone. Look for it. And they should do it primarily in euro and GBP, not Australian dollar. Euro and GBP, they have to do it, and then you will come across upward shift in trading zone, and that could continue till end of the year during the final quarter. So they are expected to make the swing and slide, and then again tomorrow they are expected to swing, slide for 2 sessions and firm up. Then firm up on Wednesday, and then rise a little bit during the European session, and then make the slide. And then there Thursday, people might be nervous after the FOMC because for a prolonged period, the interest rate was not changed. So all are anticipating there might be a change in that decision making. So probably at least a token rise in interest rate might happen in US. That is what many people anticipate. And beforehand, Euro and GBP are expected to make the drop, and then you could come across that FOMC will give a mixed reaction and a small firm up might happen. Then afterwards, you'll find on Friday or weekend, there will be more long liquidation in the case of Euro and GBP. So build up the sell positions and keep stop at entry once the position makes profit, and then you try to close position during quick drops. Now, with regard to the levels in which the currencies are expected to swing, currently you come across that Euro is trading around 1.13. They are likely to come below that of 1.10. Then GBP could come down from 1.54 to 1.51 area, and USD could go from 119.75 or 120 base to that of 123. Then CHF, from the current level, it could straight go to that of 0.9950 or short of parity. And this FOMC trigger could bring in the parity, breaching the parity in the case of USD CHF. And in the case of Canada, or also the S&P, Libor rate could give the stimulus. And also in the case of Canadian dollar, it could be wide range swings from the low to high, high to low, and things like that. Australian dollar could come down quickly on the downside, and then it could gain along with that of Euro and GBP. So ultimately, you will find it's more of a downward move to start with, and they may continue the downward move. And if you don't be in a hurry to do the bottom fishing, and they may continue the drop during the next week also, probably make sideways move. That is lower level consolidation with the downward stop end. So they will discourage traders taking the buy positions, and then subsequently, after accumulating enough buy position, they will start gaining the levels in the market. And many of the people are of the opinion, or the experts are of the opinion, I have seen in fxfleet.com, the expert fold says that Euro and GBP could come down till year end. I'm of a different opinion, and they are expected to go up for the year end. Now coming to that of the market reading, so Euro formed the low 1.1326 and the high 1.1360. They not breached the low or the high, but they are only making a pip by pip small slide. It is sluggish. And GBP 1.5429 and 1.5459. The spread is very low. And they are not breached the low or the high. Then the case of USD yen, 120.45 was the initial low. They came down to 120.27 and holding around that of 120.4142. They are likely to come down a little bit, briefly hit the stops below that of 120, and then start gaining the levels. Then in the case of Swiss franc, they could breach nominally by about 2-3 pips or 5 pips below that of 96.80 and then go up and breach the high and go down. They're simply holding it. The spread is very narrow. Don't commit now. If they make a spread of 40 pips and then and more, and then you commit position, so that you will be able to really see some nice profit with regard to USD CHF buy position. Then USD CAD 1.3227, 1.3262. They are not breached the lower the high, and it is showing nominal USD weakening. And Australian dollar, they quickly gained the levels to 0.7136, and from there they dropped it to 0.7076. 7078 was the initial low. They breached the initial low and just firmed up, pretending as if it is a stop point, and then they are likely to hold and sell, build as much sell position as possible, and then start making the slide. So always keep in mind, when they hold without much of an upward stop and they go closer to high but not making much of an upward stop, and that shows that they are building sell positions, holding near high and building sell positions. And why? They don't give profit to that of the buyers. So if you buy, probably they will show 5 pips profit, and when it is in the money, you feel that it is comfortable to hold, so that when they gain further, you will be able to technically might also look that it is bullish, so that people might take the buy and hold, and the players will just swing the market around those levels and induce the traders to take the buy positions, and afterwards they are expected to make the slide. And during the process, those who go in for an average in quick succession during the slide might become vulnerably trapped when they make an extended downward stop, and then they will go in for a margin call or liquidate all the position with a huge loss, etc. So always try to see that you commit only one position at a given time. After that position makes profit, keep stop at entry, then you commit another position, so that when the market goes again, suddenly you will not lose money in all positions. Instead, you will lose money in the last position what you have taken. That too, if you use the hedging, then the hedging helps you quite a lot to limit the risk, and it can give opportunity for you to do either way trading. So when the market is near the high during the early part of the session, not breach the high for 30 minutes like today, near the high in the case of Euro and GBP, and take a sell position, and then keep 30 pips hedge order to limit the risk. And later on, when the position makes about 15-20 pips profit, keep stop at entry and remove the hedge order, so that you eliminate the risk. Then subsequently, you use the trailing stop in the profit-making position. Keep about 45 or 75 pips limit order, so that when they make a downward move, you will be able to book profit in your sell position in the case of numerator currencies, and buy positions in the case of denominator currencies. Now, these are all the session timings, and early and the late sessions, they handle the majors. Mid sessions, they handle the crosses. So during the mid session, if you commit a position, you have to wait for a prolonged period for the profit to be seen. Whereas if you commit during the early session, you'll be able to easily keep stop at entry before the session gets over. And during the late session, you will come across the quick move happening in the market, and thereby you will be able to book profit. So that way, you try to focus on the session-wise trade, then you will be really benefited. And in between sessions, you come across the gap time, and during gap time, they are expected to make the false move. So in some currencies, they may make the false move, in certain other currencies, they may not do. And so you have to watch which currency is doing false move, commit position, so that you'll be able to book profit quickly in first 30 minutes of the new session. So on Thursday, because of festivity in India, so I'll not be able to present the or review the webinar. So on 21st, next Monday, again I'll give the Asian session live market analysis webinar. And tomorrow I'll be giving the monthly webinar, that is tracking the forex market together, part 1 and part 2, explaining exclusively the trading strategies. So I will use the forecast, I will use the market reading, and then take a decision whether to go in for a sell and buy trade or a buy and sell trade, and then show you the profit during the second part of the webinar. First part, I will take the position beforehand, before you, and second part, I will show the results of the trades what we have entered and show how exactly the profit could be easily seen within the session as swing trades, session-wise swing trades. Then again, I'll take the position for the part 2, and you can see. So I will try to take the positions in such a way that you will be able to easily understand how trading decision can be simplified. No sophisticated analysis required. You can use the live market quote page as a simple tool, and with which, by noting down the initial lows and the highs and how exactly they are breaching the initial low and going below, or breaching the initial high and going above, you will be able to take appropriate trading decisions, provided you understand the type of moves they are doing it in the market. I will try to answer to the questions which are asked here, and later on, if you have got more questions, you can ask me so that I will answer to those questions. Then briefly, I'll explain the expected market moves by end. In Mario, the hedging of position by buying in both directions. Can you elaborate more? Yeah, kindly wait till tomorrow. I'll explain more during the tracking the forex market together with that. How to set the trailing stop when we buy in both directions. I am bearish on Australian dollar intraday. Yeah, I'll explain it. How to. Please ask the same question tomorrow during tracking the forex market together webinar. I'll explain it in detail. Then Monal, when you say swing and slide, is there a particular timing depending on the early and the late? How is the best way to catch swing trade? Okay, as I explained, that the first 1.5 hours from the start of the session is the early session. So before end of the early session, commit a position. Then by late session, you will be able to see definite profit. And the forecast says swing and slide is expected during this session. Now, you are mistaking sell position, but during the mid session, don't set sell position. What you do is, during start of the late session, by 5:30 GMT, they will try to form up again, pretend as if they are going to breach the high, and then they will make a drop. After making a brief false move, they may come to 1.1355 or 56 and then start making the slide. So during that false move, if you take a sell, then you'll be able to easily book profit by end of the late session itself, or during that of the early European session when they are trying to make a lower level swing and make downward stopping before making a firm move. Please show slide 2. Yeah, I will show it. Display the forecast expected range. I will show both the slides. This is the way they do it all the time. Yeah, there is a way you have to do it. During early session, try to commit a position, and during the late session, you try to book profit. Then in the question answer window, the army But you see USD CAD by end of this week. Do you think that Fed will increase the rate this week? And I do not want to comment on the increase or decrease in the rate by Fed. But I can tell you that Euro and GBP are expected to make that drop. That's what, based on my forecast, I'll be able to tell you. In Australian dollar yen, is it likely to test 0.80? Shams. Australian dollar yen cross. Aussie is showing positive net change. Yen is showing negative net change as a denominator. Both are showing the USD weakening move. Then Aussie yen is around 85 level. When both of them show the USD weakening move, you hardly come across any swing in these currencies. Only if yen is showing slightly 23 pips or 21 pips negative net change. Aussie is showing 2 pips positive net change. So you come across a small downward move from the top. Yesterday close, 11 pips, Friday close. So only when they make contrarian move, they could bring in more downward move. So it is unlikely that because USD yen, they are not expected to go below that of 119.75. And Aussie, they may go to 0.68. In that process, it may come to 83 or so, not more than that. It may not come to 80 level. Then Moma. So here is a theoretical situation with them. Let us say that breach the high and do an extended move upward. Then my decision after watching the market would be to take a sell position. So that's what I told you, that when they just breach the high, you have to watch for 30 minutes. And if they go above that of the initial high, stay there above for 10 minutes, but not continue to breach further upward after 10 minutes. Then it confirms it is only a stop, and after 30 minutes, they will come below that of the initial high, start making the slide. This, they will do it during that of the late session or early session. Then it will be stop and. If they do it during the mid-session, then it might be an extended move. They will go above that of the high and stay there. After forming the new high, they will stay in that range, stay above that of the initial high for 2 hours, and then start making the slide. So if they do it during the mid-session, understand it is an extended move if they go above the high. If they do it during the late session, then it will be a stop and then they will reverse. I explained it. People are asking. Only thing is, see, I am repeating many of the information what I am giving it. Besides, most of the webinars are being recorded and displayed in FX Street. But the traders want spoon feeding. They do not want to do their homework. Suppose they want to find out how exactly I am taking the trading decisions. Then please go through the webinars what I have given earlier. They are all recorded webinars available free in FX Street. And then go through. I also given in 2010 the webinar My Trading System, a webinar series of 10 webinars explaining in detail all aspects pertaining to my trading. And that if you could listen with the patience, you will not ask the questions again and again. See, understand that every day a newcomer comes and asks such questions. Then my focus on giving the forecast for this week get diverted. So I'll not be able to talk more about the forecast part of it. Instead, I'll be repeating what I explained. It is something like in a classroom, many time frame, many people enter in and expect the teacher to start from the start. There won't be any headway. So please understand, for those who have joined recently, to go through the webinars with regard to all the strategies. And if you've got any doubt with regard to those strategies, you can ask me. And I wanted to focus during the Asian session live market analysis more on the forecast part of it. Then Harry, hope you are able to understand. It's not that I'm trying to discourage anybody. I'm just trying to give a quality forecast for those who are coming in or those who want it. Then, Harry, can you give the site of your live code? You're asking for the link. Okay, I just given it in the chat window. Then Aditya, are the Euro Australian dollar and GBP Australian dollar still expected to make a downward move before reversing late in the week? See, they are likely to come down some more. Okay, no more questions. So I'll just show the forecast part of it. So as far as this third week of September is concerned, 14th to 18th, then they could use FOMC as a trigger and make for the big downward move in the case of Euro and GBP. And they could continue their downward move on Friday. And next week also they are expected to make the slide. Earlier I was expecting them to do the mid-month trend reversal during this week. After reading market, I have fine-tuned it that they could do it during the next week or the following week. Or along with that of the monthly trend reversal, they could do the big stop and moves during that time or an extended stop and then make the shift, upward shift in trading zone in the case of Euro and GBP. Now with regard to the levels, so they are likely to come down in the case of Euro and GBP and gain in the case of USD Yen and USD CH during the process. And USD CAD, they are expected to make the either way whips or moves. And in the case of Australian dollar, they could make a downward move after this upward move. And then next week, probably they could reverse Australian dollar. Because they will not simultaneously reverse all currencies, very well, in order to handle the crosses. They will, earlier you would have noticed that when Euro and GBP are in positive net change, Australian dollar was in negative net change. Now during the reversal process, what they will do, they will make one quick extended downward stop in the case of Australian dollar to start with, followed by that they could do it in the case of Euro and GBP and reverse the market. So these are all the levels, range in which the currencies are expected to swing during this week. So tomorrow I'll come back again and during 8 GMT to 8:45 GMT I'll give part 1 and 14 to 14:45 GMT part 2 of the Tracking the Forex Market Together webinar exclusively talking about the trading strategy. How do you make use of my forecast and market reading and also the trading strategy so that you will be able to consistently make money from that of the market. So I take this opportunity to thank FX Read for the facilities provided to present the webinar, and thank you all people for your presence here to listen and get the benefit out of the forecast. Wish you all happy trading. See you tomorrow.